Good morning, everybody. My name's Brendan Healy. For the regular attendees here, it's a little bit of a departure. It's usually Jordan Pence doing these, but today we're going to be going over an alternative to term life insurance, guaranteed universal life, GUL, with exclusive riders. So why a GUL? Well, it's guaranteed coverage with some additional benefits. So it functions similar to term with some added guarantees. It's guaranteed to stay in force for life, so long that the necessary premiums are paid. Same as the term on that front. An added bonus is it has flexible age guarantees and payment schedules. So you could guarantee it to age 95, 100, 105, 121. And you're not necessarily paying for the duration of the guarantee like you are with most term products. The example we have here is you could have a 7-pay where you finish paying out the premiums in just 7 years, and it could be guaranteed until age 100. Finally, with certain carriers, you have access to some exclusive riders, like accelerated benefit riders for chronic, critical, and terminal illness. And some carriers offer a guaranteed cash out rider, which is a nice bonus. We'll cover that a little more in depth as we move on here. So that begets the question, which GUL is the best? And in our opinion here at Advisors Resource Company, it's American National Signature GUL. We've written a lot of those, and in searching around, we haven't really found one that serves both our agents and their clients better than American National's does. So why is American National's GUL so great? We'll go over how it compares to other guaranteed universal life policies currently on the market. We'll cover their return of premium rider, or as they call it, guaranteed cash out rider. And we'll cover the accelerated benefit riders that they offer not only on their GUL, but on all policies, term and indexed universal life as well. So coming to the next slide here, we have a product comparison for a 50-year-old male in standard health, covered to age 121. And you see there at the top, American National's is about $12,000 a year for a $1 million death benefit. Next up in order of premiums would be Nationwide with their no lapse GUL. That's about $13,300, so a bit more expensive. American General offers their secure lifetime GUL. That's a bit more expensive at about $15,700. And then finally, you have Lincoln's Life Guarantee UL, which is 70% more expensive at over $20,000 a year until age 121. So American National certainly wins, as you can easily see, on the price front, but we'll dive a little more in depth at some other things they're better at. Whoops, sorry about that. Just got a computer update. They always come in at the wrong time. So American National has what they call their guaranteed cash out rider. And what that means, we'll mostly focus on the column on the right here, death benefits of over $250,000. If your circumstances change or you decide you no longer need life insurance, the guaranteed cash out rider serves as a way to sort of restore your financial stability. So we look here on the right and you see in the 15th year, 65% of premiums paid are available in that cash out rider. And then year 20 and 25, it goes all the way up to 100% of premiums paid. It's the lesser of the percentage of premiums paid and the 65% of your death benefit in the dollar amount. So for this one, it was $12,000 a year, roughly. 20 years, that would be about $240,000, and it was a $1 million death benefit. So 65% of your death benefit would be $650,000. So for the 50-year-old we were just looking at, he would be getting the premium back, not a percentage of death benefit, so to say. But you have the option that none of those other GULs we looked at, none of those had a return of premium rider on them. So even with American National being the best, price-wise, this guaranteed cash out rider is included at that price. So 20 years in, 25 years in, you decide you no longer need a GUL, your circumstances have changed somehow, you can get back 100% of those premiums you put in. So effectively, you were covered all of that time and you spent almost no money on it. Moving to the next slide, another thing they offer is these ABRs, accelerated benefit riders. So life insurance pays out a death benefit when you die, but what if you suffer a heart attack or a stroke, cancer, and you don't die? Their GUL, American Nationals, includes these accelerated benefit riders, which is critical, chronic, and terminal illness. Critical is defined as, I believe, something like cancer. Chronic is when you fail to meet 2 of the 6 ADLs, activities of daily living, which is eating, bathing, dressing yourself, things like that. And then terminal is, I believe it's less than 2 years of life expectancy upon diagnosis. So it covers all 3 of those. Then we have some numbers here on the next slide. Terminal illness, you see at age 55, so 5 years in, you could get up to what is effectively 88% of your $1 million death benefit. And then we just have chronic and critical illness for mild or a more severe impairment. It shows the dollar amount you can receive from that, while you're paying these premiums during the duration of your policy without actually dying. And I haven't mentioned, but if anybody has any questions, please feel free to drop them in the question box. I'll answer them here as I see them. So the name of this presentation is GUL sort of is an alternative to term life insurance. So how is a GUL better than a term? And we cover, why maybe the cheapest option, the cheapest term, isn't actually always the best option. So everyone here has heard this story. You buy term life insurance now, and when something happens, you'll no longer need that coverage. It'll expire and that'll be fine. And those things could be your kids are out of school, they graduate high school or college, and they're out of the house now, they're self-sufficient. You finally sold your business if you're a business owner, or you've saved up enough to self-insure. Unfortunately, life happens and you still do need the coverage. You don't want to be left hanging out to dry, so to speak, with a term expiring and no coverage on it. So then we go on to cover a more direct comparison of the guaranteed universal life as opposed to a term. So for the policy, these numbers we'll be looking at, it's that same 50-year-old from earlier. It has a death benefit of $1 million. The annual premium is just over $12,000. 50-year-old male, standard health, and it's guaranteed to age 121. So then we look at this grid, the guaranteed cash out rider. At year 15, you have 65% of your premium available to cash out, which would be $117,000 for this specific illustration. At year 20, you have 100% of your premiums available to cash out on, $241,000. And at year 25, you have 100% again, which would be $302,000. So at year 15, 20, and 25, but especially 20 and 25, if you decide that you no longer need a GUL or what have you, you can functionally get a return of all the premium that you've put in. You've been covered for 25 years and you just got all of your premiums back. Then this next slide is a little more tongue-in-cheek, but we look at a 30-year term and the percentage of premium return at 15, 20, and 25, in addition to the percentage of death benefit and the cash out values are of course all zeros. There's no option for returning the premium to you in this term that we're looking at, an American National term. So sort of what we call it is buy term, invest the difference. And we see here we have on the left the permanent insurance, which is the guaranteed UL, $1 million at $12,000 a year premium outlay. In the middle, the signature term, which would be for that same 50-year-old, $6,200 annually. And then we play with the idea of investing the additional money, the difference between that $12,000 and that $6,200, investing that in a side fund. So you see at the bottom half of this page, we have the 15-year summary. So the total premiums put in to the GUL would be $181,000 at that point. The term, it would be about $93,000, and then about $88,000 put into that side fund. So the cash out value at year 15 is that 65% of premiums paid in, $117,000. No cash value built in the term. And then on the far right, the side fund, you would need a 5.5 rate of return to make that cash value, which is greater than the GUL cash value. That's at year 15 with the 65% of premiums paid in option. Moving on, we have year 20 here on the second half of this page. And at that point, you've paid in $241,000. No cash value built up on the term. Full cash value available from the GUL. You have the 100% option at year 20. And then for the side fund, you would have put in $117,000 at about $5,800 a year for those 20 years. And you need a rate of return of roughly 10% to have that same cash value at year 20 as you would from the GUL. Obviously, 10%, pretty lofty goal for an investor. If anyone here certainly knows how to make 10% year over year on investments, please feel free to give me a call or shoot me an email. I'm sure I'm interested in what you have to say. And then finally, we have year 25 here. At that point, you would have paid in $302,000 in premiums. You have the 100% cash out rider at that point, so you can get all 302 back. The term, you would have paid in 156, no cash value built up. You would have paid 146 into that side fund, and at an 8% rate of return, which again, fairly lofty goal. Studies show the average retail investor over a 20, 25-year period does more like 2.5 to 3%. You'd have $366,000. So then we move on to the ledgers of these two different things. You see years 1 through 10 here. And then we have highlighted those years that we just covered on the next slide, years 15 and 20. So you see that $150,000 in year 15, it may beat it, but then in year 20, you need that 10% rate of return just to match the included cash out rider that comes right with American National's product. And then finally here, year 25, where at 8%, you do beat it on the amount of the investment value, the amount of cash. Another thing worth noting is that short, or at that point, long-term capital gain would not be tax-free, while the cash out from the premiums paid in is. So it's an interesting alternative to term. It's a pretty common thing to say, well, why don't I just get term and invest the difference from what a GUL at the same death benefit would cost me? And you can see here with the numbers, it's really not always the best idea. It requires pretty high rates of return to match even or beat that GUL. And when the term wraps up in year 30, I believe this was a 30-year term, you can continue paying those inflated premiums for that same amount of coverage, while with the GUL, you're paying a level premium for the duration of what you decide, be it that 7 pay, that 10 pay, 20 pay, a pay for life. So thanks everybody for tuning in. I'll hang around here for a few minutes and see if we have any questions that are being asked. Everyone who attended, I'm sure I'll give you a call, see if you have any individual questions or have clients that you think would be a great fit for this guaranteed universal life. Thanks for coming, and looking forward to speaking with all of you. Just hang around here for a few more minutes in case anything came up. All right, good question here for those remaining in here. Someone asked, does that guaranteed cash out rider, that return of premium rider, increase the premiums at all? No, it does not. It is included in that $12,000. It's included. So it's included on all these American National products, on their term, on their GUL, on their IUL. Yeah, sorry, pardon me. That guaranteed cash out riders on the GUL, but it is included. It doesn't increase the cost of premiums, comes right with it, and that is built into the cost. And another question here, what about those accelerated benefit riders? Again, they come right with it. That is on all American National products, those accelerated benefit riders for chronic, critical, and terminal illness. That comes built into the cost of premium. There's no increase. Those are an automatic rider with their IUL, their GUL, and their term products. All right, I'm not seeing any more questions rolling in here, so I'm going to sign off. Thanks everybody again for tuning in, and looking forward to speaking with each of you and seeing if you have any clients that would be a good fit for this GUL. Thanks everybody.